Hey everyone, welcome back to the channel. Today we are going on a fascinating journey through Indian history. How one decision of Prime Minister Indira Gandhi forever changed the country's financial landscape. Get ready for the story of 1969 bank nationalization. Picture this. It's 1960s in India. The country had just come out of two brutal wars, one with China in 1962 and another with Pakistan in 1965. Prime Minister Jawaharlal Nehru had passed away. Lal Bahadur Shastri's sudden death left a leadership vacuum, and Indira Gandhi, still relatively new to politics, was trying to navigate a country that was not only politically unstable but also economically struggling. Amid all this, Indira Gandhi, who was also the finance minister at the time, made a decision that would change India's banking sector forever. On July 19, 1969, she nationalized 14 of the largest private banks. Now, why was this such a big deal? Well, up until that point, the banking sector was dominated by private interests. Imperial Bank was nationalized in 1955 and renamed as the State Bank of India. But that was not enough to cater to huge rural population and agriculture sector of India. The private banks largely catered to industries and wealthy business owners. But here is the kicker: agriculture, the backbone of India's economy, received only 2% of bank credit in 1951, and this figure remained unchanged by 1967. Meanwhile, industries were getting the lion's share, with their credit rising from 34% to 64% over the same period. But the story doesn't end here. The political backdrop is just as important. By the 1967 elections, the ruling Congress party was starting to lose its grip. They saw a significant drop in parliamentary seats from 361 in 1962 to 283 in 1967. On top of that, they had lost control of 7 states. There was social unrest, economic hardship due to droughts, and growing perception that private banks were serving the rich and not the poor people. Indira Gandhi knew she needed a bold move to solidify her position as a leader. She needed something that would win over the masses and make a statement. Bank nationalization was that move. With it, she aimed to align the banking sector with the socialist ideals that had been adopted after independence. But there is more to the story. This wasn't just about politics. There were banking reasons as well. Most private banks were controlled by large industrialists who, believe it or not, loaned money to their own companies. Directors of major banks often sat on the boards of industries, which led to an enormous conflict of interest. The idea behind nationalization was to democratize banking, to make sure it served the people, especially rural farmers and small industries. At the time, only 36% of bank branches were in rural areas, and there was no real push to extend services to those who needed them the most. By bringing banks under government control, Indira Gandhi's administration sought to redirect resources towards agriculture, rural development, and small-scale industries. Now, this wasn't a decision made overnight. Morarji Desai, who was the Deputy Prime Minister and Finance Minister before his resignation, had introduced something called social control of banks in 1968. He tried to regulate private banks, preventing them from loaning money to their own directors and pushing them towards national development goals. But in reality, this didn't work as well as hoped. Meanwhile, the banks had a whiff that they would eventually be nationalized. While presenting their annual reports, some of them suggested that nationalization was not needed as they had oriented towards these social goals. In 1967, Homi Modi, chairperson of Central Bank of India, said that there was not a single cogent or valid economic argument favoring nationalization or social control of banks. T.A. Pai, chairperson of Syndicate Bank, who also chaired the NCC, remarked in 1967 that nationalization of banks is not necessary as the banking industry has not failed to fulfill its objectives and that government through the Reserve Bank of India, has very vast and effective control over the commercial banks. However, none of these proposals and statements mattered as nationalization became inevitable by July 1969. Prime Minister Indira Gandhi raised the issue of nationalization on July 12, 1969, leading to resignation of Finance Minister Morarji Desai on July 16, 1969. Indira Gandhi also took over finance portfolio. It was not a question of whether but when will the banks be nationalized. It did not take long, as the eventual date was just a week away. I.G. Patel's autobiography, Glimpses of Indian Economic History, provides a thrilling account of how the agenda was carried forward. He was the chief economic advisor, and on July 18th, he was asked to make the legislation in a mere 24 hours, which he duly did along with RBI Governor L.K. Jha and the Finance Ministry's R.K. Seshadri, who were flown in urgently from Bombay. I.G. Patel managed to convince the Prime Minister for nationalizing only the major banks and leaving the foreign banks out. The trio figured that the top 14 banks and ANZ Grindlays, which was a foreign bank, comprised 85% of deposits. There were also suggestions to nationalize Andhra Bank, which had deposits of 42 crores. Ghosh wrote that he suggested a standardized criteria to be adopted for the process. Rupees 50 crore in deposits was set as a threshold level for nationalization. They also decided to leave out ANZ Grindlays and foreign banks from the list. The Banking Companies Act 1969 laid down the conditions of nationalization. The objective of the act was to serve better the needs of development of the economy in conformity with national policy and objectives. However, the 1969 legislation ran into problems. There were objections over the powers of the government over the nationalized banks and the discriminatory compensation levels. This led the Supreme Court to strike down the Act of 10th February 1970 while upholding the legislative competence of Parliament. A new ordinance was drafted which applied from July 19, 1969 and was passed in the Parliament on 14th February 1970. The objective of the Act was also modified, which was now to control the heights of the economy and to meet progressively and serve better the needs of development of the economy in conformity with national policy and objectives and for matters connected therewith or incidental thereto. The impact of this decision was monumental. Bank branches in rural areas surged and credit to agriculture and small industries doubled over time. This move not only aligned banking with national goals but also transformed the way India's financial system worked, paving the way for a more inclusive economy. So there you have it, the story of how a single decision in 1969 reshaped India's economy and left a lasting legacy. From political turmoil to economic reform, Indira Gandhi's nationalization of banks remains one of the most significant moments in India's economic history. If you enjoyed this deep dive, don't forget to like, subscribe and hit the bell icon for more untold stories of India's past. Thanks for watching and see you next time.